Thanks very much, David and Amber, for joining me to tell us about this Harmony deal, procuring some 30 megawatts of power. Perhaps I'll start with you, David. Just tell us broadly about the nature of the transaction.
Sure. So this transaction is a project finance transaction. What that means is instead of Harmony building the 30 megawatts of capacity on its own balance sheet, it went the independent power producer or IPP model. And that essentially is Harmony going out and looking to the private sector that specializes in the generation of energy to deliver this project for them.
And then, Amber, just tell us about the nature of, or not the nature, but just tell us about the role that you guys played as lead finance transactors in this deal.
The RMB was the mandated lead arranger and sole funder to the IPP. And what this means is basically we provided the comprehensive debt package to the IPP in order to raise the long-term non-recourse finance senior debt, as well as the transactional banking, and also cover any of the hedging requirements that are needed with the project as well.
So, David, just to tag on to what Amber was explaining to us, just give us a bit more detail about the financing that was involved.
Sure. So essentially the IPP needs to design, construct, and then operate this solar farms. And to do that, they obviously need to raise capital to do so. These projects are then funded with a mix of equity and debt. The nature of this funding package and the long-term nature of these power purchase agreements that give rise to these projects mean that it's significantly funded by debt, which is why in this kind of deal the debt financiers play a really important role in getting the project across the line into financial close.
So, David, just to tag on to that, I don't know if you're able to give more detail around that, but where were the funds actually sourced from for Harmony?
It links back to that IPP model. So you've got an SPV that needs to build the plant and sell the energy, and how that's done is it seeks funds from private parties. So you've got your equity providers, and that are the equity sponsors in this case are AIM and Mashlaka Financial Services. And then you've got your debt providers, and that's where RMB came into the picture.
So in this model, how does it work? I mean, RMB will get 30 megawatts of power from the IPP. How long is that for? Is there an option for them to be able to extend that beyond the original time that they agreed to?
To follow on from David's answer, the combination of debt and equity would be provided to actually build the plant. Once the plant is built, then they would sell power, the 30 megawatts of power that is being built would then be sold to Harmony under a power purchase agreement for a long period.
So, David, with the deregulation of the energy sector and government allowing for private companies to be able to produce up to 100 megawatts of power, presumably, even though this is a first that you're telling us about this Harmony deal, presumably we're going to see a lot more of this.
That's 100% correct. The private sector has really embraced the deregulation that has occurred. There's a flood of activity in this space. You've got private companies who are looking for green energy that is priced at or below where Eskom sells its power, and that will, through these power purchase agreements, increase at a cost predictable price path, most often linked to CPI. So with that, and obviously there's load shedding in the country, there's really a strong movement in the private sector to really, capitalize on the deregulation and find projects to bring into the market. So yeah, and it's an exciting time.
Amber, of course, many mining companies will ensure that they try and get alternative energy because of load shedding. But a plus, of course, is the fact that they'll have a better carbon footprint. And I know that at the mining Indaba, that was the main theme of sustainability. So apart from that, what other impacts do you think mining companies going down this route will have?
So there's a whole host of benefits, really, both to the mine and I think also to South Africa as a whole. If you are procuring green energy via an IPP source, the benefits for the mine would be the predictability that they'll have in the tariff. And as you rightly mentioned, the fact that they are procuring green energy, which is great for their sustainability goals and targets. But in addition, from a South African point of view, procuring energy from a source that is, whilst wheeling on Eskom's network, separate from Eskom's own generation capacity, really allows then for a freeing up or a liberalization of some of the capacity constraints that Eskom might have in certain times of the day, whereby energy is procured from a separate resource. So I think it allows for some liberalization and some slight decompression of the pressure that Eskom's feeling at the moment. But in addition to that, it is job creation, right? So this is an entirely new project that's going to be constructed and will need to be operated for the next 20 years plus if the PPA is extended, which allows for job creation, in the area in which the project is being constructed. And so that's a great benefit for us as well.